back to another video. In today's video we're going to go over what moving averages are, how do we use them, understanding moving averages, and everything you need to know about moving averages. So let's get started. First thing first, please pause this video, read the disclaimer. Once done, please continue with the video. I'm hoping that you guys have read the disclaimer by now, so let's get started. So a lot of people have been asking about moving averages, what are they and how do we use them. So to begin with, we're going to cover what are moving averages. Moving averages are basically a type of statistical calculations used to analyze data points by creating a series of average of different subsets of the full data sets. What that means is, let's just say that there's been an average that the price has followed. For instance, a 7-day moving average will represent the 7 days closing price for previous 7 days. Make that into a line and show it to you as a moving average, similar to the one that's there, as you can see. Now, by the end of this course, you guys will know what moving averages are, how you'll have a better understanding of them, and how to use them in Forex, because they are crucial tools, something that I use for my trading day to day as well. And it's really important that we understand them. They give us various factors. It could be an edge for us to trade in the market by using moving average. It could also tell us where the market is likely to go. There's loads of different things which I'll be covering, so please stay tuned, guys. So there's different types of moving averages, guys. As I was saying previously earlier on, that the moving average is basically what it does is this. It's a calculation of the price that's been happening previously. I mean, it just gathers the data that's been printed. It gathers the close price. It adds it onto the period that you decide. For example, a 7-day period, a 50-day period, a 200 period, which is a longer period, and you use this information to again gain edge in trading and to use to get on the right direction, to be on the right side of the market. There's different types of moving averages. So there's simple moving averages, and these are the most basic type of moving averages. A lot of traders use them, and it's calculated by adding up a certain number, for example, of a certain period. For example, let's just say, like I was saying to you earlier on, that it will add up the closing price of last 7 days and then divide it by 7, so it gives you an equal weight amount of data. It usually prints as a line. So if this was a 7-day moving average, a simple moving average, we can select the setting from there, the type of moving average that we want, and then what it'll do is it'll add up the data and it'll divide it and it'll print it as a line on your chart to give you an idea of what previous 7 days data, where does it stand compared to the price being at the present moment. Now, simple's quite, it's a basic type of moving average. A lot of traders like to use simples. There's other types of moving averages as well, like the explanational moving average. This is something that I use as well. I've used simple as well, but explanation I personally found a bit more accurate, and I felt that with explanational moving averages, the data, the price, and everything else, it just seemed to be working better for me. Where simple moving averages did work, but explanational did a better job in my scenario. So this is for you guys to work out what goes well with your strategy, and how which type of moving averages goes well and works better for you. So explanation moving averages, they usually refer to as EMA. They give you a more recent type of thing, so it's like a more recent data, and more accurate as well, in my personal opinion. And again, this means that it reacts more quickly to recent price movement and the price changes compared to the SMA, and the calculation is a bit more complex for these, because it involves the initial calculation of the SMA, but it does it in a more recent type of thing, and it's more applied. It's obviously applied to a more recent price data. So these work out to be more accurate for me, and because it's more recent compared to the simple. They are good in their own way as well. But explanational will be more recent, and the concept is quite same. It's just going to divide the number of days the price is closed, and then multiply by the time that market has been spending. For instance, a 7-day will be the 7 days close price, 50-day will be the 50 days close price, 200 days will be a longer term one. So that's again it calculates the 200 200 days data, and it divides that by a particular number, and then the line gets printed, which means that you will have your moving average on the chart to let you know what the moving averages are saying, that where the market is going to head next, or to let you know what the trend is, whether we're looking bullish, whether we're going bearish. And again, you can use this information. Now there's other types of moving averages as well. These are the weighted moving average. I don't use them as much compared to the EMA, but I've tried them before. And again, it determines by calculating the length of period that's happened, and it multiplies that data as well, and then summing up the result makes up a line like that, which obviously then prints a line in your chart. The weighted moving average are they're more responsive compared to the SMAs. So explanational works out the best for me, but weight are quite good as well. It all depends on your personal preference and how you use moving averages. Again, there's smooth moving averages as well. These are another type of moving averages. They kind of like remove the noise from the chart, so it basically takes into a much longer time frame compared to the EMA or the WMA, which is the weighted moving average. So basically it's more slow to respond. So if you're one of them guys who are holding their positions for long term, like for example a day, longer than a day, so on and so forth, then you can try the smooth moving averages as well and see how they go with you and your trading plan and your strategy. Again, they're all good in their own ways. For me, explanational works the best. Simple, I did try simple as well, they didn't do a bad job. Weighted moving average was decent, but I've never tried the smooth moving average to say how it works. So this is for you guys to, if you're interested in a much slower moving average, then you can have a look at these as well. You can select the settings, the period. Typically, I like to select the longer period, for instance, the 200 period, and also like the 50 period as well, because it works quite well. Again, the preference is all up to you, the way you prefer it, and it's all up to what your strategy is compatible with. But again, this will take a lot of data and a lot of time for you to figure out what works and how you use it and which one of these is best for you. Now, the importance of moving average and how do we use them in Forex. Personally, guys, moving averages have been really important for me. As you can tell, they help you to identify the buy and sell signals. They also help you to identify different things like the support and resistance. It gives you a market trend confirmation as well. So if the price is below the moving average, then we'll be looking to sell. If the price is above the moving average, then we'll be looking to buy, because then the moving average is indicating that the price is going upwards. They face towards a certain direction as well, like they face upwards, they face downwards, they face sideways, to give you an idea of what moving averages are. And I've been using them for a long time, and they've worked really, really well for me. Again, there's different types that they can benefit you, so you can use them as trend indicators. A lot of people use them as trend indicators because obviously moving averages, they are mathematical basis type of things, and they use them with certain indicators as well. For example, the MACD and so on and so forth. Some people like to use them as support and resistance as well, because obviously, let's just say if a certain price is being held and the price is just bouncing on the moving average, then that means they'll use it as support. If the price is reacting, if the price keeps going up to the moving average and rejected, they will use that as a resistance level. And again, they help you in so many ways by identifying the support and resistance with the help of moving average. And it could be an extra confidence for you guys to put that together in your trading, and hopefully use that as an extra confidence for you to identify what the market is doing, how the market is reacting to the moving averages, and they work there in a great way as well. There's crossover strategies as well. For instance, let's just say if the 50 has crossed over the 200 moving average facing upwards, that means that we have a bullish crossover. Bullish crossover means, again, bullish is for buying. You guys should know that for now. So then that means the market is highly likely to go upwards because it's crossed over the 200 moving average upwards, meaning that the 50 is above the 200, and we're thinking that the market, we're predicting that the market is going to go up. Again, opposite that for that would be the 50 crosses over the 200 downwards, meaning that is a death cross or a bearish cross. Again, If the 50 is below the 200 is above the 50, and the price is below both of them, then we'll be looking to sell, because then we can anticipate that the market is in a bearish condition. You can use it with indicators as well. Like I said to you guys, you can use it with RSI, MACD, Bollinger Bands. I'll be dropping a video on RSI as well. That's a really good indicator, and it works like a treat with moving averages. So please stay tuned. That's going to be coming out soon. Again, I hope that you guys have got the point by now. Let's get started onto the next slide. So in this slide, we're going to be talking about moving average strategies. Again, a lot of strategies are based around moving averages. Some people like to just solely trade off moving average, but this is something that I would recommend. You need to have an edge, you need to have a system, you need to have your own trading plan, and use more moving average as an extra confidence, because the more confidence you have, the higher the probability. The higher the probability means that you'll have a higher chance of winning the trade, and the higher chance of winning the trade means that you'll be in profit. So in single moving average, this is obviously just a single line. Some people like to use a single moving average. Some people like to use obviously 2 moving averages, 3 moving averages. In my instance, I've used 3. So I've used the 10 period one, I've used the 50 period one as my middle moving average, and the 200 period one as my long-term moving average. Again, that's a dual moving average. Another strategy that people like to use is the dual moving average crossover. Like for instance here, as you can tell, the 200 has crossed over the 50, and the 10 has crossed over the 50 and the 144, and they've all been aligned. And then in this case scenario, as you can tell, because the moving averages were aligned, the price actually respected that and the price went up. So it's really important that we use this data and we identify what's happening in the market, and we can do it much easier and much better if the moving averages are there, because it just works out better for me. It will hopefully work out better for you as well. This is from my experience, guys, and hopefully you guys will find it really helpful as well. Again, there's triple moving average crossover strategy as well. So there's 3 moving averages that are crossing over each other. For instance, let's just say here, as you can tell, there's a crossover there, and there's another crossover here. And this is how you can use 3 moving average crossovers as well. But usually a dual or 2 moving average crossover is more than enough. But if you want extra confirmation, if you think that you're not pretty sure, then you can wait for a 3 moving average crossover. That will again increase the probability of your trade being in the right direction, and hopefully you guys will it'll use it as an extra confirmation or extra confidence. And obviously with 3 it's much greater probability. With 2 the probability is still good. Usually 2 is typically enough for me, but it just depends on your trading style and how you anticipate and how you prefer trading the forex market. Now you can use moving averages, Bollinger Bands as well. Bollinger Bands is another indicator. I'll be dropping a video on that as well. And then that indicator is combined with obviously moving average. It helps you to identify the overbought and oversold conditions and the volatility of market, and moving average play a crucial role in that as well. They do a very similar role in other indicators. For instance, like the MACD. The MACD is again a really good indicator. It's usually like a signal type of indicator, where obviously it's a relationship between 2 moving averages, and the MACD triggers like a signal when it crosses above to buy, or when it crosses below to sell, similar to the concept of moving average. Again, I'll be dropping a video on that as well in future, so you can learn more about it. They also use it in RSI as well, which is a crucial indicator. It helps you to identify overbought and oversold again. And I personally use the RSI. I've used the Bollinger Bands as well, and I've used the MACD, and they're great indicators. It just depends on how you use them, where you use them, and when you use them. So in this video we've covered moving averages and how do they work, the types of moving averages, what they are, and how do we use them. Again, by using these moving averages and the data that we've got here, we can gain edge in the market we can gain edge, but there's no 100% guarantee. It'll offer you valuable insight. It'll be much helpful for you. It'll help you know what's happening in the market. It'll help you decide the direction you want to trade in. It'll help you to see if the market is reversing. It'll help you to see where the market's going, where the market has been, and how it's reacting at certain points. So again, it's really important that we incorporate the proper risk management in our strategy. And if you use moving averages, then we know what type of moving averages they are, which ones work better for us, and hopefully use that as an edge in the forex market to gain gain profits, because at the end of the day we're all there to make money, and moving averages can play a crucial part in trading as well. So thank you so much for watching this video. Please like, please subscribe to my channel. If you have any comments below, please drop them below in the comment section. I'll be more than happy to answer as well. And if there's any types of videos that you guys are interested in, please drop that in the comments as well. We're also on social media like Instagram, Facebook, Twitter, so please give us a follow. We always drop valuable educational contents there, and there's loads of things that could be possibly valuable, really helpful for your trading. So please stay tuned. Thank you so much for watching, guys, and hope to see you in the next one.